Hello friends, in the series on the income tax cases, today we will discuss a very important case on section 69B and section 115 BBE. The name of the case is Montu, Shallu, Knitwears versus Deputy Commissioner of Income Tax, and this case has been reported in 109 ITR at page number 1. And the matter has been decided by Honorable ITAT, Chandigarh, B bench, and the date of the judgment is 1st December 2023. As all we know that, especially in the case of survey and searches, the department tried to invoke section 68 and 69 family and accordingly apply section 115 BBE. Section 115 BBE is applied only in those cases where the addition is being made under section 68 and 69 family. Basically, if we go by the crux of these two broad sections, section 68 and 69 family, then these are applicable in two conditions. If the department finds some undisclosed income and if the assessee is not able to disclose the source of that income. If the assessee is able to demonstrate that whatever is the undisclosed income do have a definite source, then section 68 and 69 family cannot be attracted and higher rate of tax under section 115 BBE cannot be applied. Applying the same principles in the present case, in this case there was a survey on the assessee under section 133A and there was unrecorded stock of rupees 50 lakhs which was being pinpointed by the survey team. The assessee, to buy the peace of mind and just to avoid the litigation, admitted that this is the stock which is related to my business and it has not been recorded by me in the books of accounts. So the assessee included that rupees 50 lakh stock into its profit and loss account and paid the tax accordingly, and his books of accounts were also audited by the chartered accountant, meaning thereby that the assessee completed his task by taking it into his business income and paid the normal rate of tax which is there. But when the assessing officer was making the assessment, he made two very pertinent mistakes in this case. The first is that in spite of assessee being taken this 50 lakh into its income in the profit and loss account, the assessing officer again added this amount into the income of the assessee. So there was double taxation. As far as the second mistake was concerned, the assessing officer applied 69B that talks about amount of investment etc. not fully disclosed in the books of accounts and applied higher rate of tax of 60%. When the matter came to the CIT appeal admitted that there is double addition. So as far as the double addition was concerned, CIT appeal deleted the addition made at the second time. But as far as the application of section 115 BB is concerned and read with section 69B, he upheld the addition. He upheld the excess rate applied by the assessing officer, meaning thereby that he was convinced with that there is double addition by the learned assessing officer, but he upheld that there is application of section 69B and 115 BBE. Now the matter came to the ITAT because both the department and both the assessee filed the appeals. There were cross appeals and ITAT held in this case that excess stock which has been found in the survey has direct nexus with the nature of the business of the assessee. The department is not able to prove in this case that the excess stock has nexus with any other income of the assessee. ITAT also held that there is no doubt that the excess stock was not recorded in the books of accounts of the assessee. So the first condition of section 69B was fulfilled, but the second condition that the assessee is not able to demonstrate the source of that income was not completed, and there is no way that section 69B and accordingly section 115 BBE can be applied in this case. So if the assessee has explained the source of the income, because there was direct nexus with the excess stock, because the items of the excess stock and the stock in which the assessee was dealing were the same, so there was no doubt that the stock was directly related to the business of the assessee. And in that case, if the assessee has explained the source of income, the source of excess stock, that it is related to the nature of the business of the assessee, then section 69B read with section 115 BBE is not applicable. At the end of this video, once again I am repeating the name of the case. The name of the case is Montu Shallu, Knitwears versus Deputy Commissioner of Income Tax, and this case has been reported in 109 ITR at page number 1, and the matter has been decided by Chandigarh B bench, and the date of the judgment is 1st December 2023. Thank you, friends.